When did you get bitten? How? And how does your thinking?
So we were actually on vacation in the summer of 2012 in Ibiza, of all places, where you find great investments and ideas. And we were recognized by a guy from Brooklyn from the movie The Social Network. And he started talking to us and said, "Hey, had you guys ever heard about virtual currency or Bitcoin?" And we hadn't. So we started talking and connecting. And then when we got back stateside, started to read a lot about it, and we're like, wow, this is an incredible thing. We were sort of used to social networks, and we realized that this is really like a money network. And you could, for the first time ever, basically send value through the internet like an email. And that was kind of the big aha moment from a technology perspective. And then when we were looking at the characteristics of Bitcoin and the fixed supply and understanding, we started to build this gold framework early on. And so once we kind of thought about it and concluded this is like a store of value and an emergent one, we started buying pretty quickly. And I think we purchased our first coins in the like high single digits. And I think the market cap was like under 100 million at that time. It actually quickly grew that fall over the next 6 months, probably in part due to our purchasing to some extent, though we tried not to impact the market. But that's really the origin story of our relationship with Bitcoin and cryptocurrency. It sort of started on a beach in the Mediterranean, and the last 8 years have sort of been, we've been sort of addicted to this space, and it's been really fun. But I'd say that our Gold 2.0 thesis or framework really hasn't changed in terms of how we think about the asset for the past decade.
Yeah, interesting enough, my Bitcoin moment was 2012 in Spain. I was living there, and we'd just seen our banking system always go under. And the whole of Europe had almost kind of collapsed. And having just gone through 2008 and having gone through that, and I was writing about it, and I was kind of at the heart of the whole thing, I had this round table with a whole bunch of kind of macro guys. And one of them came along and said, "Listen, the answer you're looking for is Bitcoin." And that started me exactly the same time in the whole space. Okay, so here's the thing. So you start investing in 2012. 2013 is a bull market. It then collapses. So that's the first collapse you've had to deal with in this. And then obviously we have the second one. But where did you get to in questioning yourself and your thesis every time you see it doing this 90% down cycle? Because it's pretty tricky to deal with.
So before the 13 crash, though, there was the Cyprus bailout. The Cyprus government said, we're going to haircut every bank account over $100,000. So if you have €1 million, we're taking 900,000 of it. I believe that's what happened. It took a cut off everyone. And that's when Bitcoin really hit the mainstream, at least of businesses like CNB Squawk Box. You really couldn't turn on like Bloomberg or some sort of business network without hearing about it, because I think people realized like this is the only asset in the world where a government couldn't do that, or it would be very difficult. So when we saw that happen, we knew there was going to be a catalyst. We had built our thesis in 2012. When we saw that happen, we're like, the thesis is playing out. Like, this is exactly how it's supposed to work. So that was very like invigorating and encouraging, because we're like, yes, the world's starting to get this. And then of course there's been downturns and crypto winners, but overall, like, that was super encouraging. I remember where we were at the time. I think we were in Miami. I think it was in March of 2013. Which is a scene that's captured in this book, Bitcoin Billionaires by Ben Mesrick, which we're portrayed in. But it was quite an exciting moment, obviously really sad for the folks of Cyprus, but hopeful because Bitcoin actually existed, and this wasn't that far off of, like you mentioned, the crisis of 2008, which we all lived through and saw how devastating that was. And so So yeah, that happened. And so when you have those moments, you're like, okay, we're onto something. This is going to be big. And just like kind of the reasoning before, there was like an inevitability about it all. Just like there is an inevitability about the internet. I just couldn't figure out a way how this wouldn't work. And really to shut down Bitcoin is to shut down the internet. So you really have to snip the cables. You basically have to become North Korea. And that is such a risky gamble for a government because you cut yourself off from the internet. It's not just Bitcoin, it's social network, it's big tech, which are the greatest economic drivers of at least the US economy right now. And so our calculus was that governments are gonna have to learn to work with this because they can't stop this, because stopping it is to stop the internet.
So cut forward to the next bull market. So we're now 2016. Suddenly there's a bunch of other cryptocurrencies that are coming into the front, and then we're seeing the forks. So I got out into that because I didn't understand the forks and how this was going to play out. How were you guys thinking about that at the time? Because that was a whole different world we all had to deal with then.
16 and 17 what was an interesting bull market, but a lot of it was sort of driven, I think, by Asian retail and people who thought that you could sort of raise capital through token issuance without sort of going through the traditional regulatory path. And that pretty much proved to be false. But I think it did sort of show the power of the Ethereum network and what could be done with smart contracts and that kind of ability to program decentralized apps. So it sort of showed what was possible in a first MVP. It's kind of like the pets.com of crypto. And of course it blew up in a big way. Ethereum, peaked at, I think, $1,200 a coin and is now around 600, which feels a little more real, though I still think it's an undervalued asset. And of course, Bitcoin rode that wave and benefited a lot too from, I think, retail customers understanding really the properties. And for the first time, there was like a way to access cryptocurrencies in sort of a mainstream way. When we were getting involved in 2012, we had to go to Mt. Gox, which stands for Magic the Online Gathering Exchange. It started out as a Magic card exchange and then pivoted into Bitcoin when Bitcoin was worth sort of pennies. And probably the greatest business pivot ever, except for they ended up famously imploding a few years later with a lot of value because they just sort of got ahead of their skis, so to speak. They all of a sudden were on top of 95% of Bitcoin volume, trading volume, and billions of dollars of value. And it was just sort of two people in Tokyo, and there was no licensing or any kind of real infrastructure behind it. Anyway, we bought a lot of our first Bitcoin on Mt. Gox, and that was a scary proposition. Fast forward to 2017, you could go to places like Gemini, the exchange we built, basically onboard like you would onto a broker dealer or any kind of brokerage account or open up an online bank and buy Bitcoin. So it was accessible for a lot more people at that time. So it brought in a lot of new people into the system. So fast forward, obviously the market cooled off and we're now sort of back at $20,000 or close to $20,000 Bitcoin. It's a much different story with much different facts. One of the biggest facts has been the growing deficit in fiat regimes across the globe, not just in the US. The US is actually, on a relative scale, doing okay comparatively to other countries, but our debt to GDP ratio, I believe, is 135%. We're closing the year out at 135%, which is higher than World War II. And back then we had full employment, and now we have record unemployment. So it's a different set of facts, and the deficit has been growing every year over the past decade, even though we've technically been out of the financial crisis of 2008 and 2009. That basically ended in 2009 technically. The recovery was we were out of that cycle and on the way up. And so despite a tremendous sort of bull market, where we've had incredible gains in the stock market, not saying the underlying economy and businesses or wages, but the actual stock market, and yet we're spending more than we make, and we're printing money to basically finance some portion of government operations. Add a pandemic on top of that, and people that are sort of dyed-in-the-wool Wall Street veterans and people who understand how the value is eroding and the specter of inflation are saying, wait a second, this math is starting not to work. This is not manageable. So how am I going to protect my value? And this time around, people are turning towards Bitcoin. You've got Paul Tudor Jones, you've got Stan Druckenmiller, you have Michael Saylor of MicroStrategy putting hundreds of millions of his publicly traded company's treasury into Bitcoin. They're not going into gold. If this was the 70s, 80s, or 90s, or even 2000s, gold would be the classic hedge and the classic bet. And this time around, people are saying, wait a second, there's this new thing. It's engineered like gold, but it's actually better. And it's built for the modern day. And that's, we think, going to be the trade of the decade. Even today at $20,000 Bitcoin, we believe that buying in at 20,000 will be the best trade you can make.
We're humans, right? Humans are pretty stupid. We anchor ourselves on certain things. So you've got a chart on the screen of which we all look at. It's our Bitcoin chart, right? So the all-time high is 20,000. So we look at that and that's what we anchor ourselves on. So the little trick is change the scale on your chart and squidge it down to the bottom. And what happens is you immediately think, oh, it's only just started its move. It's the same chart. It's behavioral anchoring. So that's what I urge everybody to do who's like thinking, oh, it's expensive. Behaviorally anchor the chart. The other thing I do is use regression lines, and you can use it on a log chart, and suddenly it gives you just a pretty simple understanding of where price moves and how it moves, and it just moves according to Metcalfe's law most of the time.
Yeah, it's so thematically, if you just do something simple like regression analysis and plot that line, you're like, oh, okay, I see where it's going. Yes, there's peaks and valleys, but like, you know, we always say, like, if you're taking a Bitcoin position, prepare to hold it for 5 or 10 years. Don't get in if that's not your time horizon. Just forget it. And the same is sort of true with gold, right? Who wants to trade around gold? That's not the trade here. But if you can hold this thing, and I think the same is true for Ether, for 5 to 10 years, then $19,000, $20,000 entry point is going to be a very fine entry point. But it is so interesting how, as humans, we have these anchoring and biases and things like that.
The other big one is a lot of people are like, wait, I want to own one whole Bitcoin. And they don't realize, A, that they can own a fraction of a Bitcoin, but there's like a mental block or a psychological...
Because again, the anchoring bias is
yeah.
gold coin, banknote, right? Physical things. So the anchoring bias we have is that's all you can own.
Right, that's all you can own, or my ego says I need to own a whole one. I've heard that from like young people as well. And there was a movement early on in Bitcoin to move it a decimal point, the micro Bitcoin. But that never really took off. But I guess if like Gemini and Coinbase and all of us said, hey, let's make Bitcoin 2000.
We've got Bitcoin share splits. Is that what you're talking about?
Yeah.
Or just changed our UI.
Stock split.
You know, like, so it's like you have 200 of this, or, it costs $200 or something.
Yeah, it is. I mean, people they split companies for that purpose. So here's an interesting fact. There's something like 40 million plus millionaires on the planet. There's, of course, only 21 million Bitcoin. There's not enough whole Bitcoin, not that you have to buy a whole, for millionaires on the planet. So to Tyler's earlier point, like, you don't want to be the last one in. And there's going to be millions of millionaires that will never own a full Bitcoin.
Yeah, and I love that. It's empowering, right? I've always said to people, just to finish off, this is the biggest legal front-running opportunity I've seen in my entire life, because we know the institutions have to come in. The more the market cap goes up, the more the institutions have to come in.
Bitcoin was always going to happen. It's just we didn't have the computer science breakthroughs to make it possible. But it was always going to happen, and it is going to happen. It's happening. So.